Hello everyone, and welcome back to the ninZa.co live trading series. In our previous videos, we focused on automated trading. Today, we'll be trading entirely through manual market analysis. This live session finished with 15 trades, only 3 losses, and over 6,000 in profit. More importantly, we'll explain the thinking behind every trading decision. Let's get started. Here we can clearly see a sharp flash dump. However, don't let this type of move fool you. In many cases, it's simply a liquidity vacuum, where price moves aggressively due to a lack of liquidity rather than the beginning of a sustained downtrend. After a flash dump, the market will often experience a quick rebound as liquidity returns. In addition, price has just entered a low volume node, LVN, on the volume profile. This is an area with very little traded volume, indicating that the market doesn't accept these prices. As a result, after a sharp sell-off pushes price into an LVN, the market often rejects that level and produces a quick rebound, moving back toward areas with higher liquidity. At this point, we can enter a buy trade to capitalize on the reversal following the flash dump, combined with the LVN on the volume profile. As expected, buying pressure returned quickly, and the trade reached its target in a very short time, confirming it as a high-probability rebound area. Next, we scale into another buy position to take advantage of the ongoing rebound before price returns to the high-volume node, HVN. This is the area where the market often gravitates back after moving too far away from its accepted value area. As price reaches the high-volume node, HVN, for the first time, it presents an opportunity to trigger a sell trade. Since this is a fresh zone, the liquidity level hasn't been tested yet, making a strong and fast rejection more likely and providing a favorable reversal setup. Next, as price returns to the low volume node, LVN, it once again shows a bullish reaction, confirming that this remains a potential reversal area. This gives us another opportunity to enter a buy trade. However, this is now the second test of the LVN, so the edge is no longer as strong as it was on the first touch. For that reason, it's important to manage the stop loss more aggressively and be prepared to exit if the rebound loses momentum. Next, price returns to the high volume node, HVN, once again, giving us another sell opportunity. However, this is the second test of the level, so the rejection is typically weaker than the first touch. While the setup still offers an edge, it's important to manage the position more aggressively and avoid expecting a major reversal. As expected on the third test, the high-volume node was no longer strong enough to produce another meaningful rejection. As a result, our third sell trade was stopped out. This is a common characteristic of liquidity zones. The more times a level is tested, the weaker its edge becomes, as the resting orders at that level are gradually absorbed. Taking advantage of the breakout above the high volume node, we entered a buy trade, expecting price to continue higher. However, the entry came a bit too early, before the breakout was fully confirmed. As a result, price pulled back to retest the breakout level, and the trade was stopped out before the trend could develop. Next, we identified a volatility contraction pattern, VCP, forming on the chart. This is one of the most well-known breakout patterns, introduced by Mark Minervini. It is characterized by progressively smaller price swings, indicating that buying and selling pressure is becoming balanced before the market makes its next directional move. As a VCP develops, it often suggests that selling pressure is being absorbed, leaving the market ready for a strong breakout once new buying momentum enters. That's why we entered another buy trade, aiming to capitalize on the breakout potential of this pattern. The target was placed at the origin of the previous sharp sell-off, an area where selling pressure often returns. The trade successfully reached its target, capturing nearly 150 ticks in a single position, delivering an excellent reward and highlighting the strength of combining the VCP breakout with a well-defined target. Next, as price reached a previous supply zone while also touching the point of control, POC, we entered a sell trade, expecting a price rejection. However, the bullish momentum was simply too strong, overwhelming the resistance area. As a result, the trade was stopped out. This is a good reminder that not every supply zone leads to a reversal, especially when the primary trend remains strong. On the next trade, we chose to follow the prevailing uptrend. After price broke above the POC, it didn't immediately fall back below it. Instead, it consolidated above the POC, indicating that selling pressure had faded while buyers remained in control. This is an important sign. When price breaks a key level, holds above it, and begins consolidating instead of reversing, it often signals continuation rather than rejection. That's why we entered another buy trade to capitalize on the ongoing trend. In the next price action, we see price breaking above the VWAP. Typically, the first breakout above the VWAP is followed by a search for a new equilibrium, as the market determines whether the breakout will be accepted or rejected. At the same time, the volume profile shows price entering a low volume node, an area where price is often rejected due to thin liquidity. When these two factors align, they provide a strong reason to anticipate a short-term bearish reversal, making it a favorable opportunity to look for a sell trade. This time, our analysis was correct. Price quickly reversed to the downside after being rejected around the VWAP. This suggests that the earlier breakout above the VWAP was not accepted by the market. Instead, price moved lower to search for a new equilibrium, making it a classic failed VWAP breakout. Based on the newly established bearish momentum and our previous analysis, we entered another sell trade. Once a failed VWAP breakout is confirmed, the market often continues moving in the opposite direction. We took advantage of that momentum by staying with the downside move. Next, we entered another sell trade, continuing to follow the market's bearish momentum. Once the downtrend is confirmed and sellers remain in control, trading with the momentum generally offers a higher probability than trying to catch a bottom too early. Next comes the highest reward trade of the entire live session, and also the final trade. Here we noticed that price, the VWAP, and the POC were converging into the same area. Through our research on auction axis, we found that this is a very meaningful market condition. When these key value references converge, the market often enters a liquidity compression phase, which is frequently followed by an explosive breakout. We explained this behavior in detail in our previous video. Based on that analysis, we entered the trade in anticipation of the breakout, and it ultimately became the highest reward trade of the session. It doesn't stop there. The dots continue to appear, indicating that the POC is constantly shifting. This suggests the market is still in a distribution phase. When multiple candles continuously establish new POCs, it indicates that heavy trading activity is concentrated in that area. More importantly, most of the candles responsible for shifting the POC are bearish candles, showing that sellers are dominating the distribution process. Based on this, we concluded that the probability of further downside was high, which led us to enter a sell trade. As expected, price moved in our anticipated direction and delivered an excellent reward. This is the full view of the move, showing that when you read the market context correctly and wait for confirmation, you don't need to predict the market, you simply trade the edge it provides.
Join the ninZaFamily forum to stay connected, ask questions, and explore ideas with our team and other traders. There's a lot more waiting for you inside. Links in the description. Thanks for watching until the end. If you found this video helpful, don't forget to hit the like button, subscribe to our channel, and ring the bell icon so you don't miss our latest content.